friends. Welcome back to the Wall Street Skinny. I'm Jen.
I'm Kristen.
And we are two lifelong friends, former investment bankers, and teachers here to help you land and thrive in the world's highest paying jobs. Okay, so before we bring our awesome guest on today, we have a special announcement. Today is Saturday, September 21st, and on Wednesday, September 25th, so in 4 days, we are hosting our first live masterclass, and it's free.
Yep. And so in terms of what we're going to be covering, we will be breaking down essentially the top 5 technical concepts you need to know to ace an investment banking interview or a private equity interview. Now, no prior finance knowledge is necessary, although obviously, as always, listening to this podcast never hurts. And so we're going to be tackling how to value a company. We'll be breaking down equity value versus enterprise value. I'm going to take you through a framework for how to understand the 3 financial statements and how they flow together, so you can answer questions such as, like, one of the famous ones is, how does $10 of depreciation flow through those 3 financial statements? We're going to get into EBIT and EBITDA. We're going to get into a crash course into leverage buyouts. It's going to be a packed hour. And so I know that in this day and age, it is really easy to say, like, this all sounds great, we're just going to catch the replay, but we would really love if you decide to join live. So we've obviously never had an opportunity to bring our community together like this before. And I can promise you, nothing matches the energy of being there live. And we're also going to be giving away 10 free McAbacus licenses, our favorite Excel add-in, which we covered in last week's podcast episode, to those of you guys who actually show up live.
So make sure that you sign up via the link in our podcast. And just so you know, I mean, this is Kristen's show. I'm just going to be like dancing around behind the scenes, but I'm going to be learning right along with you because, as you all know, this is Kristen's wheelhouse. I'm just your markets girl. And so that's actually what we've got for you today. We are bringing on my former colleague, a fellow ex-Lehman and ex-Barclays interest rate saleswoman. Her name is Jamie Patton. And Jamie's going to tell us all about what it takes to have not only an incredible career in fixed income sales, but what happens after you leave the sell side. You are all so obsessed with exit opportunities from all the different roles. So Jamie's going to give you the scoop on the huge range of exit opportunities from interest rate sales because she's done it all. Jamie left her amazingly successful career in sales to go work at the bank portfolio for Wells Fargo. And she is now the co-head of rates at TCW, which, for those of you who haven't heard of it, it's a West Coast asset manager. They have $200 billion in assets under management. So Jamie's got a big job. And we are going to cover the huge news story from this week, which is the Federal Reserve. We just had a 50 basis point rate cut. We're going to talk about what that actually means in layman's terms. You've heard about it all in the financial press. We're going to break it down for you. And we're going to talk about how expert investors like Jamie are taking that into account with their investing. So let's get to it.
Awesome.
Jamie, we are so excited to have you here. I'd love it if you could start by telling us a little bit about your background, what your career path has been like, and ultimately now what it is that you do.
Sure. Well, first of all, thank you so much for having me. I've been excited for this for weeks. So my background, I grew up in Atlantic City, New Jersey. I was a waitress for 6 years on the Jersey Shore. Like, I am not the pedigree that I think you normally see on Wall Street, but I went to college, majored in computer science. I interned at Lehman Brothers, like under the research umbrella. It was the analytics department. So I was like a computer science person in a bank, and I was sitting in a cubicle, and it was super boring. But whenever I would have to talk to the trading desk, I would go down to this like big floor and talk to people, and I didn't know what anyone was doing or what anyone was saying, but it was like this wide open floor, and it was so much energy, and I just knew I wanted to be there. So I'm on this big trading floor. I'm like, I don't know who these people are or what they do, but I like them better than my computer science friends, and I like the floor better than my computer science friends. So when they gave me an offer, I was like, thank you, but can I have an offer on the big floor? And they're like, that's not how this works. The offer doesn't say big floor versus cubicle. So no, but you can have this offer. And by the way, you're welcome. And I was like, meh. So I went to Microsoft. And I was like, oh, I'll be on like the business side of a tech company instead of the tech side of a business company. I had no idea what I was doing. Well, Microsoft was even more boring than the cubicle at Lehman Brothers. So that lasted 9 months. And I kept calling the people at Lehman Brothers like, hey, about that big floor. So I was in San Francisco with Microsoft, and I got a call that was like, actually, we might have something for you in San Francisco at Lehman Brothers through the Lehman. I know that you guys have talked about this, but they have this sales training and research training program where you just kind of entered without knowing anything. So I went to that interview, and I was like, I remember Tom Matamore. I'm not sure if he'll listen to this, but I might make him. And I walked in and I was like, oh, he's wearing a running watch. I'm just going to like make friends with him. Like I'm a huge runner. And I was like, oh, is that a running watch? And he just looked me dead in the eye and said, no. And I was like, well, that's all I got because I don't know bonds. I don't know stocks. So somehow, I do not know why, but that man hired me, and thank goodness he did because I worked for him all through Lehman and all through Barclays. He put me on a derivatives desk at the time. Jen, I know you know this. Now it's rates, but we had cash and derivatives, and I think he was like, oh, you know math, you'll be fine. It was a rough start. I did not ask enough questions. I didn't go well in the beginning, but it went well in the end. The problem was I was never a good salesperson. I was always like developing my own opinions, and Jen knows how it is. Like the traders would be like,
salesperson.
well, they'd be like, hey, I'm a seller of this bond, and I'd look at it and be like, that bond sucks. And and sometimes I would come back and be like, hey, and that made me look at it, and I would be like, oh, this person owns that bond, they should probably sell it. And I'd come back and be like, can you actually bid that bond? He's like, are you kidding me? I'm supposed to be selling this bond. Like I remember one time one of the traders was like, do you know what sales means? It means sell. And I was like, yeah. So, but I became close with some of my clients. And to your earlier question, this is the best platform to go anywhere in finance because from a sales seat, your job is to talk to 30 clients or however many you have all day, every day. So you learn about all different kinds of clients. You learn who they are. You meet the people. You know if you want to work with them, if you would never want to work with them. And over time, I became friendly with one of my clients at Wells Fargo. And eventually one day he just called and said, hey, you ask so many annoying questions. Are you like being polite or trying to get information, or do you actually have interest in this? And I was like, no, I actually have interest in this. So he got me this interview. I went there and the rest is history. That was my entry into the buy side. But I knew I liked the people. I wanted to work with those people. I like what they did. Some clients just do one thing, whereas at a bank, we were doing all kinds of things.
Yeah.
And then at Wells Fargo, I loved that job. My job technically was to lead this team that did all of the interest rate and foreign exchange risk mitigation for the bank. But when you think about risk mitigation, it's kind of the same as risk taking. It's like, what risk do you want to go away? What risk do you want to take? So whether Wells Fargo was issuing a bond and we wanted to hedge that from fixed to floating so that they had a different liability, or whether it was their mortgage servicer and they wanted to mitigate interest rate risk in their mortgage servicer, or if they issued a bond in a foreign country and wanted to mitigate the foreign exchange risk, whatever it was, we could make it go away through hedging derivatives. And then my team was actually getting moved to New York. And this is where it's a great example. We can get into the women thing. I've seen a lot of guys in my career where their wife like goes along and supports their career. And my husband supports my career more than I could ever imagine. But he's also like, can we go anywhere but New York? He's from Florida. He's a total California guy. He's a pilot and a kite surfer and all these things. And he's like, New York City. So going back to my sales world, I had kept in touch with the clients I loved, and I loved covering TCW. And I literally reached out to them and was like, we always used to kind of joke about me working there, but so for real, like, would you want me to work there? It reminded me of the most awkward date that you could ever imagine, where you're like, oh, you were joking about taking me out, but like, do you want to take me out? And
like, hey, remember we hit it off on this date 5 years ago? Can we get married?
Yeah.
Remember? And they were like, yeah, come in, talk to us. And it all worked out. So that jumping off point in my career, being in sales and having all these contacts in the business, was just invaluable. And even now at TCW, we're developing some new systems and software, and some of my friends at other clients are already on that software, so I can pick up the phone and call them and be like, hey, how did you do this? Or how did you solve that problem? It's just, it's really invaluable.
I'm curious what made you go from being computer science. I was engineering. So like for me, I always thought, okay, I'm like very technical. If I was going to do something, I would think it would be more trading. I somehow got like put into CDO structuring, but I'm curious why you decided to go into like a sales role, just because it seems like you were like, I had strong opinions, and you clearly are very smart. I mean, if you were studying computer science. So what made you decide to do sales? Not that not that salespeople are very smart, Jen, but like sales.
No, but that's the stereotype that you're implying, right? That sales is much less technical than trading.
Yeah. Yes. So I'm just curious, what made you decide sales versus a trading role? And then I'm also curious now in your current role at TCW, are you now taking risk and like how you've kind of evolved?
It's a great question. So I would say that at the ripe old age of 22 or 23, I had no idea what I was doing. I didn't even
Yeah, that's
know
fair.
sales versus trading versus research. Now I'm like, I probably should have been a trader or strategist or something if I was on the sell side. But the guy who hired me, and this is why hiring is just the most important thing on Wall Street, he knew better than I did. He's like, okay, we have a computer science major. She's math oriented, but she's in here trying to make conversation with me about my running watch. So
Yep.
he kind of picked it for me. And I think his view was the more technical you are in sales, the better.
Right.
So
Yeah.
a great interview question that I started asking after someone asked me was in sales, like, what are you? Are you a more technical salesperson, research sales? Are you more relationship sales? And there is a right answer. The right answer is I'm whatever the client needs me to be. If that client needs me to drink beer with them, I will drink wine because I don't like beer. But if that client needs me to be a research salesperson, I will be a research salesperson. If that client is trading treasuries, it doesn't really matter what I do, then I'll be their best friend. So that's another place that I didn't do great in sales because I was kind of like, oh, wow, they go out really late and I'm tired. But I played the game for a while.
Love that.
So now I'm the co-head of global rates. So TCW is a little bit unique in the asset management world because we don't manage our own portfolios. We manage by sector. So for every TCW fund, we have some funds and we have some separate accounts and we have other things, but we do the duration curve, foreign exchange for all of them. We also have some global products that we are much more involved in just because rates and FX are such a huge part of global. But even those, the generalists who are the CIO and they are really the PMs on everything. And then it's managed by specialist portfolio managers across each sector. So credit, rates, and securitized are the three big ones.
Oh, very
in fixed
interesting.
income.
If you had to break down what TCW does for my 6-year-old, my 8-year-old might understand it, but for my 6-year-old, where are you in terms of the real money, fast money, asset manager spectrum? What would you describe as your overall approach to the markets? Whose money are you managing and why?
So first, I would differentiate between real and fast money in the way of real money is thought of as like a pension fund. You have actual money that you invest, whereas fast money is considered, I gave you $1, but you're really investing $5.
Yep.
So fast money is another way of saying leverage. I would contend that it's all real because fast money can lose or make as much money as real money can. So it's all real. TCW, the bread and butter going way back has been fixed income bond portfolios, real money. But TCW also has private credit, we have equities, we have some funds that are levered. So TCW is really a traditional asset manager, multi-asset. Most of our assets are in fixed income bonds. And then within the fixed income complex, we have everything from our big flagship total return fund, which is benchmarked to the Bloomberg aggregate index, and it's a total return. We try to make as much money as we can being invested. It's usually plus or minus 1 year from that benchmark roughly. And then we also have separate accounts. So a pension fund could come to us and say, can you manage my money, which is going to be managed probably pretty differently than a total return fund. We also have insurance money. We have short duration. So like I have cash, but I want to earn a little bit more on my cash. And then other parts of TCW, we have an equities division. We have private credit, which is growing like crazy. I know that you've talked about that because I've listened to that episode. But yes, TCW is a traditional multi-asset manager, quote unquote real money, although we do have funds with leverage. So maybe that's fast, but it's all real.
No, I think that's so important too, because we make these distinctions on such a gross level. It's, oh, okay, that's they're a money manager, they're an asset manager, they're whatever, that's real money. But to your point, the landscape has shifted so much where so much is now housed under the same umbrella, more so than it used to be.
Oh, it's funny because I always had in my head, I don't know why. I think because I had one friend that went to like the mezzanine fund at TC or so I always thought that TCW was like predominantly focused on mezz investing. And it's like, actually, no, you guys have like everything. So when Jen initially said that you were coming on, I was like, oh, TCW, they do mezz. She's like, no, they do everything.
Well, no, I was like, maybe, I don't know.
One of the things.
And Kristen, what is mezzanine investing for our listeners who aren't familiar with that?
Yeah, mezzanine investing, I always just think of it as, we think about just the capital structure in like a leverage buyout. I'm going to use that context because there's just so much capital in there. But you have like senior debt, you have subordinated debt, you have equity. Mezz is like in between almost the subordinated debt and equity. I mean, technically it's subordinated, but a lot of the times they're targeting higher returns. So they're investing in the riskiest part of the debt, where sometimes there will be equity kickers, there will be warrants embedded. A lot of the times it's much higher risks. It's sort of the most almost like subordinated. It's like the layer in between the most junior debt and equity. And they kind of sometimes will go along with a private equity fund. Like some private equity funds like to invest along with certain mezz funds. Anyway, it allows private equity firms to add an extra layer. I don't know if Jamie, you have a better explanation.
No,
but
I think that's
how I
perfect.
always think about explaining it.
It's different. It's fancy ways of saying different levels of the risk spectrum.
Yeah, exactly.
So going back to your old sales days, when you talk about sales as selling, that is so different from what my experience was, because the desk would have axes, but those were really kind of like jumping off points to start a conversation. And when we use the term axe for our listeners who are unfamiliar with it,
I've never heard it.
I always thought that the term came from an axe to grind. So when the desk is axed, it's what they would like to do. They will be able to offer better than the average bear pricing on whatever the trade is and whatever the specified direction and whatever the size that they've specified, because it suits their risk. Maybe a client has put them into risk that they don't want and they want to get out of it, and they're looking for a client to find the other side of that trade. Maybe they have a specific view and they are trying to put that on, even though they're not taking outright risk. They are taking risk within the portfolio of trades that they facilitated for clients. And so they may need to get that position on in order to be better suited to facilitate other trades, things like that. So desks across the division will publish their axes throughout the day. Corporate bond desks tend to have very specific issues that they're either trying to move or cover shorts in, right? So that, to me, I think of as much more conventional selling, where you're trying to move a product that you have in inventory. But in the rate seat, I never felt like I was selling anything. So I'm really curious. Can you explain more what you mean by you really thought that sales was selling?
It's a really good question. And I would just like to say also that sales is the best skill, like across all industries, all products, and everywhere in finance. I'm not in sales at all anymore, but if I have an idea and I can't sell it to my boss, we're not doing it. So I'll just start there. But sales felt like, how do I get someone to trade with me? Much more than it felt like, I have this thing that I want you to buy. And
I agree.
I think sales gets a bad rap, and I don't know why. I was just laughing with someone that I used to work with forever ago, because one time I told him, like, you would be so good in sales. And I meant it as a compliment because he's very communicative and can convince people to do stuff. And he's a trader. And it was like I just told him that he sucks at life. He's still mad at me. It's been like 15 years. And he's like,
funny.
He actually told me today, I'm not so mad at you, but I'll never forget that feeling that you made me feel. So,
Well,
and I'm
Jamie,
like,
just to interrupt
wild.
really quickly, we've been watching The Industry, or apparently it's called Industry on HBO. I'm only 3 episodes in, so don't spoil. But one of the things that we observed that they got right about the show so early on is how everyone in the industry is looking down on someone else. How IBD looks down on sales and trading looks down on IBD. Within sales and trading, salespeople look down on research looks down on sales, trading looks down on everybody. So everyone is up on their high horse thinking that everybody else is inferior. But at the end of the day, the closer you are to the P&L in sales and trading, theoretically, you have a much more sound argument for why you are theoretically at the top of the totem pole, if you will. So but I can see that.
I mean, and actually just echoing what you said, Jen and I also always talk about how even people who want to go into investment banking because they think it's technical, I'm building models and I'm analyzing all this stuff. Again, at the end of the day, as you get more senior, it's a sales job. We want you to come to us for the IPO or for whatever capital you're raising or whatever deal you're doing. And it's a sales job. It's a relationship business that, yes, starts technical at the bottom, but then as you get senior, it's sales. So it's like sales is everything.
Yes,
I totally agree. Or like if you go to the doctor and they're like, I think you need surgery, but like you might not because the surgery doesn't always go well. And then if you go to a doctor who's like, I could do this, you'll be up and walking the next day. Like you just sold me on surgery. Like that's weird, but
Yeah. No, it's so true.
And this is where I also always say that waitressing prepared me for Wall Street much more than college did, which makes my dad want to cry because I think he sold his house and his car to send me to college. But anyway, when you're a waitress, it's like, how are the fried clam chips? I'm like, well, they're freeze dried and came out of a freezer. And I'm like, oh, they're delicious.
Yeah.
You know, like how do you answer that? I don't know. We served raw clams, and raw clams come in all different colors, but everyone expects them to be pink. So whenever they would be gray, people would be like, why are my clams gray? Afraid they're going to get food poisoning. And I was like, oh, that's just, they come from deeper sand. I totally made that up, apparently. I don't actually remember making it up, but I repeated that to my dad one time. My dad was like, that's absolutely not the reason. And I was like,
he's like, they're absolutely diseased. Do not serve those.
He's like, it depends on the blah, blah, whatever the clams are eating. And I'm like, oh, I may have made that up. I don't remember. I don't know. But, you know, everyone's fine with their clams. So yeah, I got a tip.
I will say, though, echoing that also point is there is definitely a relationship. I mean, one of the things I also was a waitress and I loved it because you were always doing something. You were busy. You were like never bored. And that was one of the things that, again, for me was so cool about the idea of the trading floor was just like the hustle and bustle, always being busy, never having even a minute to stop and be like, I have nothing to do today. Although the joke was
except you were in structuring.
Yeah. Well, no, I did not. My offer was global sales and trading. And then they like place you and they were like, well, here we have an engineering person. She seems like great for the CDO structuring desk, even though I had no idea until the first day I showed up on the floor. I thought I was like CDO trading. I had no idea what I was going into. So that's
But I think Jen just did that thing where she's looking down on you. So just so that people know.
Oh, 100%.
Everyone looks down on structuring. So back to your specific role, what kind of accounts were you covering and what was kind of the day-to-day like for you in rate sales?
So I loved my sales job was regional because, as you mentioned, I was in San Francisco. So we covered everyone on the West Coast. That's a little bit different than in New York. You might be a hedge fund salesperson or insurance salesperson or the federal home loan banks. So I covered banks, asset managers. There was one hedge fund, an insurance company, and they were all so different. But I will say, even among like asset managers, they were all so different. So I remember when I was leaving Barclays to go to the buy side, I called one very large client south of here. And I said, I just wanted to let you know, I accepted a job on the buy side. You're in good hands with so-and-so. And he was like, what? Why didn't you tell me you wanted to be on the buy side? You could have come here. And I was like, oh, and I actually said this. I said, I thought that you wanted me and my entire family to be dead. So it never occurred to me to call you for a job. And he laughed and was like, Jamie, that's just the game. And I was like, no, actually, it's not the game for me because I like people to feel good and not awful. So, but yeah, I mean, I just said that too, felt so good too.
I can't believe you told a client off on your way out the door. That's impressive. I
And
got told off by clients when I left.
I mean, the weirdest thing is I think he respected me more for it.
Of course. He was like, well, now I have to hire you.
But yeah, all the clients are very different. But because of my role in sales, I knew that I would not fit there culturally, whereas I knew that I would fit with TCW culturally. Yeah, they will tolerate me.
And so you are obviously a fixed income expert. We are sitting here. It is exactly 24 hours and 30 minutes after the Fed announcement yesterday, September 18th. I think there's no one better than a former salesperson, fixed income expert to talk about your view on the Fed. And just so everyone can understand, in Jamie and my former role, what we'd be expected to do is seconds after the Fed, you're sitting there, you're comparing the two statements side by side, looking for where they changed the placement of a comma, where they did, may instead of will, the tiniest little changes in each word of that statement can have huge market moving impacts. You've got economists coming over the hoop, you've got traders shouting, and you've got every single phone is ringing or is being dialed in order to communicate to clients what the view is on what the Fed just said.
Hold on, quickly. When you say you're looking at the difference between a comma and what was actually, you're talking about his speech versus what was put out.
No, so there's two things, right? So there's the statement that's issued, and then there's the actual speech that Powell gives.
Okay.
There's the question and answer. So those are also two very different things. Because one is this formal prepared statement that is very tight, that is issued to everyone. And then there is the kind of longer Q&A dialogue that he'll have with reporters where he basically says a whole bunch of nothing.
So you're basically trying to almost like read tea leaves to see if something changed between the statement that was prepared and then when he actually steps up on the podium?
No. The statement that was prepared this time and the statement that was prepared last time. So that's where the minute changes are, to give you a sense of how the Fed's thinking is evolving and changing from the prior
I
course
see.
of
So
monetary
basically,
policy.
he said this last time, and this is what happened. So now it's like, let's look at this to see how it compared to last time, so we can basically try and predict the future for the next cycle. Okay, or for the next announcement. Got it. That makes sense.
I always laugh at that meme. I don't know if you guys have seen it, but it's like commas save lives, and it's like let's eat, comma grandma, let's eat grandma, because that's what we do to the Fed, and it's like they have to be so careful. They move a comma, and it's like, oh my God, we're eating grandma tonight for dinner.
Yeah. That's
The
exactly right. And
overreaction.
Kristen, by the way, does not believe in the Oxford comma. So we have this battle daily just within ourselves here.
Hey, Jen's a double spacer.
I am a
So,
spacer.
I
Double
know.
space after a period.
We're
civilized.
older. Yeah, it shows
We're
our
older.
age.
Kristen's older than I am.
I am. I'm 6. I was, well, actually, we both were Massachusetts, so this makes no sense. But
Yeah, we
I
went
was
to
never
the same
taught
elementary school.
I was never taught double spacing. My husband's like Jen, double spacer. But like anyone else I ask, they're like, no double spacing. So I'm in the right. Sorry, Jen.
We only have an hour and a half, so I don't even know how to unpack that.
Okay, so
so
let's
the
talk
Fed.
about the Fed, and let's talk about, first of all, just key takeaways in layman's terms, because I think everyone could go to the financial press right now and see Fed cuts 50 basis points. Let's talk about the J curve. Let's talk about the Taylor rule. Let's talk about all this jargon, blah, 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 blah.
The dot plot.
The dot plot. If you are someone who is casually interested in finance, what the heck does all of this mean? What happened? And why does it matter?
That is such a good question. And I get so many questions about this. So most importantly, the Fed's policy rates are the way that they control how easy or difficult it is to access money. So if you think about really, like, this is the most broad example I can think of. I'm a bank and I have money that you gave me as deposits. Now, what do I do with that money? I can just hang on to it and basically put it at the Fed, where the Fed pays me whatever this rate is that they control, or I could lend it out and give you a mortgage, or I could lend it out and give you a loan, or I could give it to a company. Like, how do I decide what to do? Well, if you imagine Fed rates are at 10%, all I have to do is put this money at the Fed where it's guaranteed to come back to me and earn 10%. I'm not lending you guys anything ever. Whereas if I put the money at the Fed and it's earning 0% or 1%, I'm like, all right, well, I'll lend you a mortgage. Okay, I'll lend you a business loan. That's kind of the basic big picture idea. In reality, it doesn't work that way at all. In reality, there are so many lags and so much complex stuff in the system. If you think of our economy as a very highly levered thing, it's still important what rates are. But here's a perfect example. Before the global financial crisis, the $8 trillion agency mortgage market, so like everyone's mortgage in the US, for example, it had about 35% of its loans were adjustable rate. So today I'm paying this rate, rates go up, I pay more, rates go down, I pay less. So when the Fed moves rates and the rest of the curve follows, my life gets easier or harder. I owe more or less. So you can see how they could directly, now if I'm paying more in my mortgage, I might not buy that new pair of shoes. Now, less than 1% of this $8 trillion market is floating rate. So the Fed just moved rates. Wow. It like kind of doesn't matter to anyone. We did this thing here at TCW. We did an analysis and we realized that 85% of the bonds in the, and just as an aside, fixed income asset managers have benchmarks. So if I buy bonds and they go up or down, I don't necessarily look good or bad. I need to do better than my benchmark. So 85%.
And dumb question, does everyone use the Bloomberg Ag as their benchmark, generally speaking? Are there other benchmarks that we should know about?
There are tons of benchmarks. So the Bloomberg Ag is probably the most popular one, but that's just a US focused thing. There are global indices, there are short-term indices, there are long-term indices. So like a pension fund might not use the Ag, a pension fund might use a super long index.
Yeah.
So 85% of the mortgages in the Bloomberg Aggregate Index do not even begin to become economic to refinance until rates are another 100 basis points lower. And that's when they begin to become economic to refinance. So if you're sitting there with a mortgage and the Fed moves rates, doesn't matter. It didn't change my life at all. I don't know if it changed your life, but
No.
didn't help me at all. Can't
I will
refinance
say,
my mortgage.
Yeah, no, we bought our house last year. So I was talking to my husband last night and I was like, hey, so the Fed cut rates 50 basis points. How is that going to affect our mortgage? He's like, well, the 10-year was basically unchanged. And if anything, did it go up, Jen?
It sold off. You just gave a speech today to CNBC about how the curve bear steepened, and you're asking me if 10 sold off.
But that's my point. So like, if anything, the bear steepened, the 10-year went up, and he's like, as a proxy, he's like, I always think of it as, you take what the 10-year is, add some spread. That's more or less going to get you where the mortgage is. And so for people who are sitting here like, I need to go buy a house, the Fed cut rates, like, sorry, too bad, so sad. It affects you none. For us who's like, we need to refinance, well, we'd love to refinance if rates go down. They didn't. Front end rates went down, but it doesn't affect, as a consumer, a house buyer or whatever, it doesn't really affect your life that much. I mean, sure, maybe you get like a 5-1 arm, but for the most part, it's not moving the needle at all.
Not at all. And this is exactly why at TCW, we're actually long duration. So we think bonds are a great investment right now because there's always these long and variable lags between Fed policy rates and the actual economy. But today, especially post-COVID, those lags are much longer than historically because rates were so low for so long. Everyone who could lock in a mortgage locked it in. Some idiots who had to move and get a new mortgage like me. Oh, sorry, Kristen, I didn't mean to call. I was trying to call myself.
No.
But most people, other than Kristen and me, don't have recent mortgages. Your rate's locked in at a low rate for the next 30 years. You don't care. And also, there are also all these psychological impacts post-COVID that make these lags between Fed policy rates and the actual impact to the economy and the consumer much longer. So for example, let's say my husband actually has a business that he started in 2020 and he got a loan in 2020. It was so hard for him to hire people in 2021. Now, the last thing that he wants to do is let go of that worker. So you see things, and this is like reading the tea leaves a little bit, but you don't see the unemployment rate rising like it normally would, but you see things like manufacturing overtime hours are super low. So people aren't getting rid of that employee, they're just giving them less hours.
Yeah.
So we're reading all this like, well, yeah, congrats, the Fed reduced rates by 50 basis points. It doesn't matter at all. The Fed is going to have to reduce their policy rates by so much more and so much faster than what the market's pricing in. And coming back to your original question, what really matters is the difference between what the Fed does and what the market is expecting the Fed to do. So yesterday was really interesting because I can't remember a time when the market was ever more split on a decision. Usually the market's like, the Fed's going 25 tomorrow, it's 100%, or the Fed's going 50 basis points tomorrow, it's 100% priced in. Yesterday it was roughly 50-50. So it was a little bit of a surprise, but then the Fed used their forward guidance to say, we reduced rates a little bit more than you expected, but don't read too much into it because between now and the end of the year, we're only going to go another 50 basis points or 0.5%. So the market was like, okay, you went a little bit more than I expected, but now you're going to slow down, so I'll just calm down. And that's why rates went up instead of down out the curve.
And there's that, and there's also what experts are doing that's not necessarily communicated adequately, I think, to the public and the financial press, is they're looking at what is the total scope of the policy change from start to finish. So not just what's going to happen over the course of 2024, but what's going to happen through 2027. What are we looking at for the next, call it 3 years of policy and beyond, as evidenced by that dot plot, Kristen, that you brought up in terms of their guidance? And what does that mean for the shape of the yield curve that captures all of the forward rates referenced in there, right? The thing about, my husband was a swaps trader for a long time, and he always jokes the difference between swaps traders and everybody else is they can see the future, right? They're using forward rates. And so those forward rates were predicated off of, if you will, a dot plot that has now shifted, but has not shifted in terms of the size of the overall policy shift. It's just happening faster. So if it's happening faster, but it's still going to have the overall magnitude, well, then you're certainly not going to rally more. Rates aren't going to come down more in response to that just because it's happening a little bit faster. If anything, it means there's going to be fewer policy eases happening further down the line in the future, and your curve should steepen out. Those longer dated rates should sell off.
And I'm glad that you brought up the dot plot because the dot plot is super interesting. And a lot of people dismiss it because it's like, oh, the Fed doesn't know any better than we do. But if you read into the dot plot, so the dot plot is 19 FOMC committee members writing down their forecasts. So their long-term dot is kind of like where they think the neutral rate is. So what Fed policy rates mean the economy is not heating up and it's not slowing down. It's just kind of like steady state. The amazing answer is that no one knows. So they have this long-term dot. If you dig in, like Jen and I do, and look
Are
at
you
every
always like
single
trying
dot.
to figure out who's which dot? I'm
Oh,
like,
yeah.
okay, that dot over there, that really looks like the Texas Fed
That,
governor.
like Pal is definitely a low dot. I know. It's like,
Yeah.
yes, I do that all the time. But so the 19 dots for the long term, like their own definition of neutral, they range from 2.375% all the way up to 3.75%. And there's no more than 3 dots on any one rate. So you have 19 people all saying that neutral is totally different. And we love all these aviation analogies because soft landing, hard landing, whatever. Okay, so
yeah.
I'll put this into an analogy. And by the way, I'm a pilot, so I love these more than anything.
Are
I
you
can't
really?
stop. Yes, it's so much
What-
fun.
Oh God. Okay, I have to ask you questions when we're done. But
So
yeah.
now, so the way I phrase this is, okay, you're on an airliner and there are 19 pilots on the plane, and no one can agree on the elevation of your destination runway. Everyone's like,
Oh my God,
like
I'm a
you,
bad
you hear,
flyer. This is not going well with me.
so you have one guy being like, it's super low elevation. Then you have these 3 guys that are like, no, it's low, but it's not that low. And then you have this other guy who's like, it's super high. It's a really high airport. It's in the mountains. And you're sitting on that airliner and everyone's like, it'll be a super soft landing. We're going to have this perfect landing. That's kind of how I feel at TCW. I'm like, but no one knows where we're going or when or how or like, no, I don't want to be on that plane. Like, use your GPS. What's wrong with your GPS? So this is one of the
That's a
reasons
great analogy.
I'm like,
Yeah.
no, we're not going to have a soft landing. Come on. And this actually reminds me of in COVID, I remember talking to my friends and being like, I guess the global economy is just going to shut down and equities are going to make new highs. Like, that doesn't really make sense to me. And of course, that's not.
That's
we had to
exactly-
suffer through inflation and all of these other
Yeah.
problems. That's kind of how I feel right now. It's like, so the Fed can just raise rates over 5% and like equities just make new highs and we're all happy forever. Like, no, it just doesn't make sense. And I think that
Yeah.
us math people often overanalyze. And sometimes it helps to just pull the camera back in finance and be like, does this make sense? No, it doesn't. Let's be long bonds.
Yeah. Mm-hmm.
I'm curious in terms of how you approach your fixed income investments. You said that you were long duration because you believe that ultimately what the market is interpreting from these Fed comments is inconsistent with what the future strength of the economy is going to look like. You think that it's going to be much worse, right? We've thrown around this term long duration before, and it's something that when Kristen and I first started this, she was like, what does that mean? What do you
I had
mean?
no idea.
Right?
Yeah. Mhm.
For our listeners who are less experienced fixed income investors, can you explain what you actually mean by being long duration? Because we say, oh, that means long bonds. Well, okay, then why are you saying long duration? Why aren't you just saying, oh, I'm long bonds, right? Why
Yeah.
do we use that specific terminology to describe the risk?
So this goes back to the index conversation we had earlier too. So our benchmark is the universe of bonds. That's kind of how we think of the index. So we want to own more bonds than the index does, or more fixed income duration. And when I say duration, it's like when rates go down, say 1 basis point, how much money do I make? I want to make more money than the index makes.
Yep.
That makes sense.
So for those of our listeners who have heard us in the past talk about DV01, so every single index is going to have its own DV01 calculation. Every single bond is going to have its own DV01 calculation, and that's a dollar value of a basis point change. So as rates rally or sell off, if I own $100 or $100 million of X, what does that translate into every time rates move by 1 basis point? How much money am I going to make or lose? So if the duration of the Bloomberg Ag is, say, 7 or something like that, you're saying that actually the duration or the DV01 of your bond portfolio might be 8, right? You have a long leaning. So you are going to make more money when rates rally than you would if you were simply just long the index. So Jamie, another thing that you and I talked about prior to this call, you talked about asking all these questions, right? As something that you did as a salesperson because you didn't just want to repeat whatever it was that the trading desk or the research desk was saying. And you were also curious about what your clients were actually doing. So I think that this is something that is misunderstood by a lot of people, I think both young and old actually in the industry, we're taught to ask questions during our internship and when we're an analyst, but we're also told, don't ask the same question twice. Don't make the same mistake twice, because that shows that you didn't learn from what I told you. You told me a story about Erin Callan, who was someone who worked at Lehman when we were both there. I talked about Erin on the Lehman bankruptcy episode, which is like episode 8 or episode 9, I mean, ages ago. But can you tell me that story that you shared offline about Erin and asking questions and how that shaped your thinking?
So I can't remember if I was an analyst or an associate. I think I was an associate. And Lehman used to do a really good job getting all the class together, and we all had relationships with each other and thus across the firm. And they would have speakers come in, and one of those speakers was Erin Callan. And she gave us the advice, ask all the questions. She said, and I will never forget her quote, she said, if asking this question makes me dumb, then fine, I'm dumb. But chances are other people are dumb too. So just ask the question. And to this day, I think about her because I ask so many, and I had a talk with myself maybe like 5 years ago, and I'm like, I'm going to stop saying, sorry, this is a dumb question. And I started saying, this might be a basic question because it makes me sound, I don't know, it made me feel a little bit better about myself. But every time I do that, and it takes courage still after 20 years, 25, I don't know, a lot of years, it takes courage. But every time I do that, I feel good, and I see another face in the room that's like, oh, I'm glad you asked that. And by the way, if anyone's ever like, that's a really stupid question, I'm like, well, I'm glad I asked it because I was stupid a minute ago and now I'm not anymore. And I love that advice. By the way, Erin also had 2 other bits of advice that I remember from that talk. One was about being a woman. And she was like, you know what? I'm going to wear dresses, and I'm going to wear, and sometimes she would wear sleeveless dresses, which, at
For
Lehman,
those
no
of
one
you
did.
who, so Erin Callan she ran the financial sponsors group at Lehman Brothers and took Blackstone public. So she was this extremely high powered, she was the, golden child of Lehman back in 06, 07. She was then promoted to CFO right before Lehman went bankrupt. But she was like on the cover of Vogue magazine or Vanity Fair, I forget, she was all over. And I remember I worked on the same floor that she would oftentimes come down. And she treated that floor like a catwalk, and she would march down that floor in a leather miniskirt and gave 0 fucks and I was like, you are my hero and I want to be you. And I just idolized her so much. Erin was very unafraid to be female in a time where it was still so transitional, right? It was like, what are you supposed to wear? Are you supposed to wear like a boxy pantsuit and like hide yourself? How do you dress? Like how do you act? Like it's the floor was evening out in terms of male-female ratios, but it was like, is it okay to be just a straight up female? Yeah.
Mm-hmm. And I remember that so clearly because prior to listening to her, I was always trying to kind of like be a boy. Like I was wearing suits and not bright colors. And I had this crazy hair that I would try to like tame, but I didn't really know how. And Erin was just like, I'm me. And I bring something to the table that these guys don't have. I love that. And the other thing she said was, she said, I want to feel like if I left this firm, I want to feel like people would personally miss me. I want to have personal relationships. I want
I love that.
to matter. And from that moment on, I was like, you know what? It took me a really long time to have the courage to do all of that. But now I love it. Like I want to have real relationships at work. And I am a girl and I am sarcastic and I can be an asshole and like all these things. And I'm just going to be myself. And it is so awesome. The amount of anxiety that it removes when you're just like, you know what I love? Puns. And some people hate them. I love a pun. And like on Bloomberg Radio, all of a sudden I'm like, well, let me tell you why it's important to have women on Wall Street. Because when you're looking at a hair chart, who knows hair? Women. And it's like, it's so much more fun. I don't have to like stress. My armpits sweat less because I don't have to be as nervous that I'm going to say something. It's like, yeah, this is me. And by the way, if he doesn't like it, he's not going to have me back on. But that kind of approach to work, especially as a woman I hate to say it, it's still a man's world. The old boys club is still alive and well. It's alive, and no one wants to hear you say that, but it is. The benefit of now is that it's not the only thing. There are other things. But it's still there. Like you look out, I can't remember the last time I looked around in a meeting and it was mostly women. We are super lucky at TCW as women because we have a lot more women. We were in a meeting the other day with a treasury official and the CEO, the head of strategy, our head of ESG and myself were all women, and we looked around and we looked at him and said, have you ever had a meeting with a client before that's all women? And he got really uncomfortable and said, I don't think I do. No, but thank you. Or is that okay? Everyone is so scared to just talk about it. And
Everyone's
it's
so
like,
afraid
it's okay.
to talk about it. They're so afraid they're going to say the wrong thing and get canceled. But I think it's very empowering to be able to laugh in these situations too. Like humor solves so many things, and we're also afraid to be funny.
Oh my
But
gosh, so
speaking
true.
of being female, Jamie, I'm really curious. In your junior years when you were in sales, you talked about how clients used to treat you. And I'm really curious, what was your perception? Not like how did they treat you because you were female, but sharing so much of who you are and kind of how you used to get anxious about things and what makes you feel confident and all those things. How did you deal with clients treating you badly?
It was really hard for me because I'm a pleaser. I want everyone to be happy. And sometimes when you're in sales, your client and your trader, you're on two phones and they're like both pissed and they're both
Yes.
yelling. And
But
I had
by
this
the way, they're supposed to be, because they are like, you're supposed to be making both of them happy and they can't both be happy at the same time.
my boss actually said that to me. He's like, because I had the best boss ever at Lehman and Barclays. And I would walk into his office and be like, how can I get cursed off in 2 ears at once? And he was like, then you did a great job. Congrats. Get back out there. And so, but then I started taking it. I was like, okay, I'm a smart person. I solve problems. How do I solve this for myself? And sometimes your client wants to hear you fight for them. But like you work for the dealer, you work for the bank, so it's hard. And then sometimes the bank wants to be like, you work for me, screw that guy, but the client's right. And it was just a really tough thing for me to navigate. And I remember like my peak sales moment was at a really tough client that was like, tell your guy to go fuck himself. Blah, 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 blah. And I was like, I totally hear you. And I knew that he just wanted to be heard in that moment.
Yes.
And Jen knows we had a handheld phone, and then you have a headset, and you could put your
I would do
finger.
two phones. I couldn't hang with the headset. Okay. I was a two phone girl. Yeah.
So the headset, you could put your finger over the mouthpiece instead of hitting mute. So you can't tell that you're on mute.
Yeah.
So I was on my handset with a client and he could hear me, and I muted my trader. And I was like, look, the bottom line is this is fucking bullshit, and I'm going to tell and I just let him have it on mute so he did not hear me or no.
He could never hear you. Yeah.
And the client was super tough, and I was like, yeah. I was like, you know what? Call me when you get your fucking shit together. And I hung up. And then I put the client on mute and I said, hey, I'll hit you right back. And then the client was like, thank you so much. You don't know how much it means to me. Like totally different person that I was talking to.
Yeah.
And I went home and I felt really good about that, but I also felt so disingenuous. So I just was constantly anxious on the sell side. I'm like, I did a smart thing, but did I do a good thing? Is that the right thing? Like, am I living my values? And I was just like, this is not what I want to do with my life. This is so hard. And it was so easy when I was junior because I just needed to make people happy, and I could make people happy, and I didn't have those tough clients. So yeah, it was hard. It was, and every client is so different.
Right.
If a client that was my friend was mad at me, it was like I couldn't sleep that night.
Oh, it's devastating. Yes.
I was like, but you're my friend, and like, you know my mom, and like
yeah.
But then if like the tough client's mad at you, you're like, I don't care about you. So I don't know.
Follow up to that, Jamie. So then when you went to the buy side, how did you view the sell side, having been on the other end of those calls? What did you do in terms of your interactions with the sell side? How did that shift, having had that perspective of knowing what it's like to be on the other side of that phone?
I wish everyone started on the sell side because it's really like being a waitress.
Yep.
You will never treat a waitress badly for no reason when you were a waitress for 6 years. That said, if I get a waitress that is not good and does not pay attention to me and does not write down the order, I'm like, I'm not tipping you. So I'm so much harder on the sell side, but I am always 1,000,000% of the time honest with them. But I'm hard on them because once or twice they've done something immoral or unethical, and I'm like, oh, I will shut you down across the firm. Like, do not, the only thing you can screw up, you can have a bad day, you can have a bad price, but if you are immoral or unethical, I see red. So it's good and bad. Like I have to comment. I remember at one point at Wells Fargo, my boss was like, take a chill. Like no one killed anyone's baby. And I was like,
can I ask what the catalyst was, or do you not feel comfortable sharing?
No, I was front running. So we asked a dealer for a price on something that was a little bit more esoteric. It traded in the brokers, which it never does. And then it moved down. Another dealer told me. And because I was on the sell side, it's so easy. You sniff this out so quickly. One dealer told you, hey, FYI, this bad guy. And then you go to the two other dealers, and one's like, I saw that happen. It was not us. And the third's like, it hasn't traded in a week. And I'm like, okay, so is you. I'm like, pull the tape, pull the trades. So pulling the tape is like, go check every trade that this trader just did. So I told the sales guy,
and we've used that in a different scenario before, when I actually told the story of when a client pulled the tapes on me for a voice inquiry. So sorry, can we explain what that means in the trading standpoint?
Yeah, so pulling the tape, I think generally just means like go check on that person. Literally, I think it was like the phone recording, to Jen's point, but for me it meant like go to compliance, check every trade that trader just did, because he front ran me. And that means I was trying to buy something and he bought it in the market before me to then sell it to me at a higher price and take no risk. And in some products that's actually illegal. In treasuries, it's not technically against the law, but like if you did that in equities or something, and I'm oversimplifying a little bit, but you cannot do that. You cannot trade ahead of your client knowing that the client's going to trade. So we pulled the tape, we saw, and he kept saying, no, I didn't trade. And of course he did. So their head of trading and my boss and I were all on the phone. Their head of trading said, look, he's a good guy. This is not him. And I said, oh, so he's just stupid? Because I'm like, are you a good guy? And you did not know what you were doing, so you're dumb? That's what I mean when I'm like, I can be really hard on them. But if you do the right thing and mean well, there's no better client, because I will never lie. I trust you. A lot of people just kind of won't share the whole story. They're trying to get their way. But I would never do that. And relationships are so important in this business. I mean, look at the fact that like we didn't have to move to New York City. My husband didn't want to. And I got this because of my relationships.
I think that's amazing. And another thing too is I think that you demonstrated an ability to ask questions of clients specifically about how they were making their money. And that's a very delicate thing, but is so important. And I'm coming back to, I've been binge watching industry, so this is so top of mind for me. But when I was in a junior sales role, I covered every different type of account at different phases of my career. But there was never someone sitting me down saying, hey, now you're covering a mortgage servicer. Let me explain to you about what it's like to manage a portfolio that has negative convexity. Here's what they need to do. It was, here's Chase Servicer. They are going to yell at you a lot. Give them some options. Give them some swaps. And no matter what, don't pick up the phone after the second ring. It's over by then. So everything that I learned, I was intuiting by, okay, this seems to be happening when this happening. They seem to do this in response to this. And it was always like the process of derivation. I'm curious, when you would ask questions to your clients about their mandates, about their strategies, would they be forthcoming with you? Like, how did you navigate that balance of being like, listen, I'm not trying to front run you. I'm not trying to like tell everybody what your big secret great trade idea is. But like, I want to understand what the hell you're doing. How did you navigate that?
That was hard. So two things. I did it in a really nice way. That's like, if you can tell me, I'm just so curious. And people do want, if you show an interest in what they do, they kind of want to tell you. Sometimes they can't. Sometimes they don't even know. That blew me away.
That's scary.
So sometimes you're talking to an execution desk and the PM just told them to do that. So there's all these different answers. I found the best responses came like when you're out and about at night having some drinks. So I remember when I was really young, I don't really carry a purse in real life, but I would carry a purse to these dinners, and I would have a little notebook and I would like write down like little things in the bathroom. But people will like, oh, let me tell you how important I am, or they're just more open when they're not being recorded and all that stuff. But some clients would just never tell you. So like the guy who I mentioned, I told him that I thought he wanted me and my entire family dead. He never told me anything and was like, if you can't figure it out, then you don't need to know. And then some of my good friends would like really help me and teach me. And that was so cool. So it really ran the gamut. But I go back to like, you just can't be afraid. What's the worst they can say is like, I can't share that with you. And it's like, okay.
Well, for me, the worst was what you said. If you can't figure it out, you don't deserve to know. I was always so afraid that my clients would think I was stupid, that I didn't ask the stupid questions that would have made me smart. Back to what you said about Erin Callan, right? If I had been brave enough to ask the question and been okay with seeming stupid at the time, I could have been a lot smarter. Instead, I was protecting this secret that I didn't really know what they were doing and trying to pretend like I actually did.
Mm-hmm. I do think, though, in all these different verticals, there's just so much knowledge and so much jargon that if you're in one area of finance, some other area doesn't understand it. And Jen and I, again, obviously, when we started this whole little project, I didn't understand, like, I didn't know what duration was. I didn't understand the yield curve. I'd never heard of a dot plot. Like, I probably would not have been able to tell you when the Fed was cutting rates. Like, it was never on my radar. And I was so seeped in all the investment banking stuff. And then Jen, on the other hand, would be like, sizing the risk and like buying duration. But if I was talking about banking stuff, she's like, yeah, I have no idea what that is. That also just seems overwhelming. Like, why do people want private equity? Everyone wants to be a trader, right? And it was just like, I was speaking English and she was speaking German. It was just, and now as we're doing this and talking to all these people like you, we're starting to be like, oh my God, like there is some stuff that was so foundational that no one ever taught me, that I never even knew to ask the question. The thing that has taught us is how many people are so clueless about so many things. And like, you think, oh, this is a dumb question. It's actually not, because most people don't know it, because most people don't tell you the basic shit. They just expect that you know it.
So true.
And most people don't know it.
And I think that's another difference, just being a woman. Like, these guys are so confident, and I was so intimidated by them, especially when I was on the sell side. I like never wanted to talk. But then I'm like, wait, actually no one, even when you do know what the words mean, you don't really know where the market's going. I mean, I have a strong view, but like all these people speaking so confidently about a soft landing, like you actually don't know that. Or like me speaking confidently about hard landing, like we don't actually know that. We're just balancing risk reward and trying to choose the option that skews better. So that's where, yet again, like diversity is so important, because you get personalities who are like, I don't know anything, I'm gonna ask it all. And then you get personalities who are like super confident, and I'm learning from the super confident people, like, oh wait, I need to sound more confident. And they're learning from me, like, oh, you can ask those questions. It's really important to have all the kinds.
Yeah.
I love that. And Jamie, you are, between all of us on this podcast, there are 8 children. And you are someone who has navigated the journey to motherhood throughout your career. And it's something that we've been unable to speak to ourselves, because we both had our children after we formally exited the industry. I'm really curious if you could talk about what your experience has been like on your journey to motherhood while working in such senior positions, and having come up through junior positions as well on both the sell side and buy side.
I will not lie to you, it's really hard. That has been the biggest challenge of my career. And every time, I hope my boss isn't listening, but every time I have a baby, I'm like, I can't do it. I can't go back. But I get it's so hard. So I've always been really lucky with the pregnancy part. I know that's really hard for some people, but it's kind of like a sport. You're like, all right, I'm going to overcome this obstacle, and it's hard to get up early in the beginning, and then you're like huge. And actually, funny story, that my second came so fast, and luckily we were in San Francisco and we lived really close to the hospital. So when we moved to LA and we're having a third, I was like, oh my God, I'm going to downtown is so far from the hospital and I don't know what to do. So I spent a lot of time stressing about what if I go into labor at work, but I didn't, thank God. And it's just so hard. So the pregnancy part, it's like you just work through it, which, by the way, like, again, these guys have no idea, people just don't know what kind of things you're facing. The first 4 months where it's basically a secret and you're so tired and sick and, you just show up and nervous. Yeah, you just show up and do it. And by the way, like, it doesn't always go well, and you just show up and do it. And for me, having a job during some tough times was great, because like, not every pregnancy worked out. And it's like, what are you going to do? If I didn't have to get up and go to work, I would have stayed home and cried about it. But you get up and you go to work, and, it's distracting. The market moves, the Fed comes out, and it's like, okay, I got through that day a little bit easier because of my job. I've been lucky enough to have 16 weeks of maternity leave. Our CEO, Katie Koch, has 4 kids. And when she came, one of the first things she did within weeks was change our maternity leave to 16 weeks to be more industry standard. So that was amazing. But 16 weeks is it's amazing, but it's still so short. Like, you're just kind of coming out of the fog.
Yeah.
So I would say every single baby was different. The first one, I was so focused on proving to my bosses and employer and myself that like I'm still committed to this and I still have my job. And I probably stopped nursing too soon because I just wanted to like be normal again. The second one I was a little bit better. By the time I got to the third one, now I'm like, you know what? And in my journey of like, this is who I am and this is a part of me. And by the way, it makes me more efficient and it helps me prioritize. So one of my favorite stories is I was on maternity leave with my third. She's just turned 8 months old this week. And
oh my God.
my CEO texted me and was like, no pressure at all. You're on maternity leave, but we have this meeting at the Milken conference. If you would like to go, I just wanted you to have the look regardless of whether you're here or not. And I was like, I'm in because that's what you do. And then I was like, oh my God, this baby, I think she was 2 months, maybe 2 or 3 months old. She would not take a bottle. We hadn't addressed that yet. I had never left her with a nanny. We hadn't addressed the bottle thing. I was like, I don't even know how I'm going to be away from her. We have to go to Beverly Hills. That could be really trafficky. And I was freaking out. And then I turned to my husband, who is unbelievably supportive of everything and has his own career. So it's not easy for him to be as supportive as he is. And I was like, what are you doing Monday morning? Do you want to go to Beverly Hills? And he was like, I'm sorry, what? Like, what? I was like, well, I really want to go to this. I'm so stressed about leaving the baby. I'm just going to bring her. And I brought her and him to Milken. And I was like, just walk around the block. This meeting's not going to be more than 45 minutes. And then it's all going to be okay. And of course, our CEO, I mentioned her. Oh, she's like, how's the baby? I'm like, she's walking around the block. She wouldn't take a bottle. She's like, oh my gosh, I want to see her. Bring her. I text my husband. He comes. I show her the baby, and then she went around telling everyone that I brought my baby to Milken, which was such a first of all, it's funny, but more importantly, the fact that she was welcoming it and putting it up on a pedestal, that was awesome. Oh my gosh, I bet no one's brought their baby to Milken before. All of a sudden, it took until my third child, but it's like, you know what? This is who I am, and I'm going to celebrate it instead of hide it. And it's cool. Like, how many people at Milken brought their baby? Probably not many. So, and it goes back to the Erin Callan thing all these years later. It's like, you know what? If bringing my baby to Milken so that I could do this meeting makes me something that's not good, then I'm not good. But I actually think it showed me so much about myself and my husband and my CEO, and it was awesome.
Oh,
I love that because I think so often, and maybe it's as women, maybe it's just if you're anyone who's overcoming something that you're potentially insecure about or isn't overtly welcomed within the industry, I think we're always looking for creative ways to juggle, right? Like you said, you're doing the backwards math in your head of like, okay, well, if we've got this traffic and we have this thing and don't worry, we can make it work and I'm always going to find a solution. And oftentimes those are the very things that can be your strength and the differentiating factor between you and just some other person at this conference, right? You could have been anyone.
I want to say one other thing, which is like, also thank goodness for supportive partners. When I went back to work after my first, it was the same thing. She wouldn't take a bottle. And I actually was like teaching a class on a Saturday. And I actually felt terrible. My husband was like trying to get her to get a bottle. She wouldn't take it. She screamed her head off for like hours. And then he finally came up and met me where I was during lunch so I could nurse her because he was like, she would take a bottle. Again, men who have not had kids don't realize. But again, a lot who have had kids, whose partners have had kids, they do understand it. And like, this is why, again, supportive policies
young women
for
who
women
haven't had kids don't understand.
No, they don't. I would have no idea. So that's the thing. It's like, it's actually, I don't know, in general, family leave policies are for like both people. Yeah. Both people need them. Yeah.
And I think it's so important that we just talk about it more. For so much of my career, I tried to hide the fact that I was different. And now I was at a work dinner on Tuesday night and my husband did bedtime with all three for the first time alone. And I got bedtime's at 7. I got a text at like almost 8 that was like, can I put one of these frozen breast milk things in the microwave? And I'm like, no, you cannot. What's going on? Why is this question coming at 8 o'clock? And I stepped out for 1 second of the work dinner to call him and be like, what's going on? Oh my gosh. Yeah. And I'm like, did you spill it all? It's 8 o'clock. Did someone die? And I came back and I just told my bosses were sitting there and I'm like, oh, got this text. And one of them, you never know how people are going to react. It makes some people uncomfortable. And one of them said, no, you do not microwave that. You put it in hot water. And I was like,
love it.
Thank you, Jerry. Yeah. He's like, I remember that. He'll learn. And I'm like, oh, it's our third. He should probably know. But regardless, I'm glad he asked instead of, and this goes back to the stupid question. No stupid question. Thank goodness he didn't put it in the microwave. So, but just embracing. And the greatest part about TCW is there's women here. Like I sit right next to a woman who's one of my best friends. And the support of like, being able to laugh when we always love to joke when she or I do something that maybe is stupid or silly or whatever. We're always like, oh, that's why you don't hire women. And like the whole row gets like really awkwardly quiet because they don't want to laugh, but they don't want to like agree, but you don't want to disagree. But it's like, just say it and make it a thing. And like we laugh. It's fun. It's funny. We're friends. It matters. It's so wonderful to have women supporting you because it's a lot easier for me to say, hey, this woman needs this thing or whatever, than it is for me to say, I need it. So just supporting each other and doing for each other what we want people to do for us, it's a really good experience. And I think this is the right time to do it. I actually when I got promoted, an amazing woman here who's super senior congratulated me. And I said, well, Penny, thanks to you, like you paved the way for this. And she said, oh no, it's a dirt road. Your generation has to pave the way. Your generation has to pave it. And I think about that all the time because the fact that she admitted, and I, it wasn't a serious conversation, but she was just like reminding me, we still have work to do, keep going, and thinking about how we can keep going the best way, being ourselves. It's all so important. And it's fun. If we can have fun while doing it, then all the better.
It is still rare to see women at the senior levels. They're getting a lot better at the junior levels, but then as people get into, again, mostly childbearing years, that's where women start to thin out. And so, yes, there is definitely more work to do to keep people who want to stay in and support them as they get through the part of life where they want to have kids.
Yeah. And just having a couple phone calls right before I came back that were like, how are you doing? You got this. Give it a try. Or like one of my girlfriends in finance called and was like, is this that week that you freak out and try to walk away from your career? And like we laughed and I was like, oh, I was just telling Andrew. And just talking about how hard it is. We go home. I mean, all three of us go home after you're working and we're not relaxing. Even if you do relax, even if you go to the gym, it's like, okay, I have 16 minutes before I have to get the traffic, before I have to relieve my nanny. And it's a lot and it's hard. And a lot of people aren't getting woken up at 2 a.m. We're getting woken up at 2 a.m. The kids are always sick. There's so much. And just being able to talk about it, being open. I go to my kids' first day of school and I want everyone to know I'm doing it. It's not a secret. I'm not hiding it because I want the woman who just had her first baby, I want her to do that. And I want to set the precedent. And some of the guys do it here. And they're so public about it that it enables me. It's not like a girl, oh, the woman has to go to the first day of school. Like, no, the guys are doing it too. It's really on all of us. And, people like Christian, like Jen's husband, he would never, because of Jen, I will say, I'm sure he would be a great guy regardless, but being married to Jen, when we work together, he's never going to give me a hard time for leaving early to go pick up my sick kid. Like, he'd be like, oh,
if he does, you let me know.
Yeah, exactly. And my husband, when he's at work, I mean, it was actually funny because he made a comment about a woman that he works with having a baby. And I was like, but you're not going to say that or even think it again, are you? And he's like, no. But people like this, and we'll get there one day, but we are not there. And it's important to talk about how we're not there because we can't get there until we acknowledge where we are.
Well, and I think the best path is paved with funny conversation.
Me too.
And, right? I really think the path to everything is always paved with humor and being able to laugh at ourselves.
Yeah.
And having fun while doing it. Exactly. Yeah. And when you feel like everyone resents you at work, if you have to go to that kids thing, you're not at the kids thing being like, well, this is awesome. I'm so glad that I'm mystery reader of the day. You're like, I got to get through this book, the pout fish, blah, 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 blah. Now we got to get back there. And like, now you get, and then you're sitting there awkwardly, like, you're crawling out of your skin because you're like, oh God, what do they think of me? Because I went to the thing. So you're not enjoying any of it. Right.
And you're on your phone because you don't so you're not really present because you're worried. Yeah.
Yes. Dude, TCW sounds like an awesome place to work. I'm not going to lie. It sounds like you guys are all like hanging out and like everyone's cool. But in all seriousness, I am curious for young listeners or people who are established in their careers, who are looking for a path to a place like TCW. I will say, it's not on the radar of many of the listeners and our social media followers who are like, I want to work in finance. You don't typically hear, I want to work at a large West Coast-based asset manager. That's not typically what you hear. You're like, I want to work at a private equity mega fund in New York City or London. I'm not sure why I use that voice, but this is such an extremely lucrative and viable career that so many people may not have on their radar, but should. And the question is if they're not going into fixed income sales and trading necessarily, what are the other paths into a career like yours?
There's so many. So, right, we do have a program where we hire kids out of college. Because we're on the smaller side as compared to the big investment banks, we don't have as big of a program, but people reach out to me on LinkedIn, people reach out to, and we always kind of know who's hiring. We do have this program. We're actually instituting a more formalized program thanks to Katie and our new head of HR. And there's so many different parts of TCW as well. Like we have a whole sales organization, we have client servicing, we have emerging markets, fixed income, equities, and then just even within fixed income, emerging markets, credit, securitized, there's so many different jobs. We have a rotational program in credit where people are looking at individual issuers, and that's a completely different job than on my desk where you're like math. So if it's interesting to people, I encourage them to just reach out, go on LinkedIn. Like, I saw you on Bloomberg. There is no easier way than to get my attention than to send me a note that says, I saw you on Bloomberg TV. I saw you on the podcast. I'm like, oh, tell me more about me. Just like,
no, but that's a great networking tip, by the way.
Yeah, just find out something about someone and mention it. People love talking about themselves. I'm like, did you see my hair? I just got it done. But yeah, it's like, I'm like half kidding and half serious. And using you guys, knowing people, like, I mean, how did I get on this podcast? Because I stayed in touch with Christian for no reason other than he's great. And then Jen and I stay in touch, and really like connecting with people, genuinely connecting with people that you like and respect, and staying in touch with them and asking questions and learning. That's the best way to get anywhere, especially a place like TCW.
I love that.
Okay, so last question. Based on your description of the role, and correct me if I'm wrong, but we get asked all the time by our listeners, oh, should I get a CFA to break into investment banking or private equity? And we're always like, for certain sales and trading or asset management-based roles, the CFA can be a huge and valuable tool. Yours sounds like a business in which that might be a very good stamp of approval to have on your resume and a demonstration of certain skills. Is that the case? Is a CFA helpful for someone who's trying to break into what you do?
I always say a CFA will never, ever, ever hurt you. I don't have mine. I didn't go to business school or get a CFA or a major in econ. So you can do it anyway. And I think the majority of all learning, no matter what, happens on the desk and live. Yeah. But a CFA is a way to show people that you're really serious and that you're committed, that you can do hard things. A lot of times a CFA is a great way. I've heard employers say before, show me that you're taking your CFA, show me that you're serious, show me that you really want it. So if you're in more of a support role and you want to move into front office or trading or PM, it's a really good way to say, like, I'm committed, I want this. That said, if you're already here, like for me, I don't think it's a need to have. I hope not, because I don't have it.
Jamie, let's be real.
So I would say even when you do either go to business school or take the CFA or something like that, approaching it with a bit of humility in that this is not the job. This is a learning tool, just like the SATs are not college. The MCATs are not being a doctor. So realizing that it's not the answer to the job, but it's a way to earn the respect of people in the business for sure.
If you were looking at two otherwise equal resumes and one had a CFA and the other did not, it sounds like you'd view that resume favorably. In and of itself, it's not sufficient to get you the job. If you've never done anything else in the entire fixed income investing world, but you just have a CFA, that's not going to do it. But it could be the thing that pushes you over the edge, or at least gets you the interview.
Yeah. Yes, that's fair. If you have two identical resumes, one says CFA, one doesn't, I would choose a CFA. If one said pilot, I would choose that one.
There you go.
If one had a running watch on.
So basically, if someone's interviewing with you, like, make sure you have your pilot's license and get that running watch.
Yeah.
Love it.
Well, Jamie, this is absolutely fantastic. I think that you have shared so much with us that's invaluable for our listeners. You mentioned a willingness to be contacted. So
Yes.
We're going to ask you to put your money where your mouth is. How can our listeners get in touch with you if they want to reach out?
LinkedIn, Bloomberg, jamie.patton@tcw.com. Anyway, through Jen and Kristen, you can find me all the ways.
Be careful what you wish for.
I know.
No, but this is great. Thank you so much. Congratulations on your beautiful family, on your incredible success in your career.
And
Well,
congratulations to
thank
you guys. I started listening to the Wall Street Skinny. I'm like, I'm going to prep for this. And then I was like, I'm prepped. I'm just going to keep going because this is amazing. Summer house references. I'm like, you're my people. I described you as the Giggly Squad meets capital allocators.
Oh, that's the nicest thing. I love
no
it.
higher praise.
I mean it. I loved it.
Seriously.
That's awesome.
Yes. Love it.
I'll tell
Thank
them.
you so much, Jamie. We really, really appreciate you and wishing you all the continued success in the world.
You guys too. Okay, talk to you soon. Come see me in LA.